Good afternoon, everybody, and welcome to the next in the webinar series for ActivTrades of Monday Market Matters. It's 20th of November 2022. My name's Paul, and I'm here today to go through Monday Market Matters and also to focus in terms of our educational content on how to debrief your trading. Great to see so many of you here joining us today. Hope you've had a great weekend. Hope you've enjoyed last week and that you're ready for yet another good trading week. It promises to be a rather chunky one in terms of news, but that will invariably sort of create all sorts of volatility and opportunities, more of which later. Today we're going to talk about how to debrief your trading. So what's on our agenda today? Well, as always, we'll just talk a little bit about the Monday Market Matters web series. And as I said, we're going to talk about in terms of our educational element, why it's important to debrief your trading. This is something you'll find I am very big on. The reason being because it works, because it helps traders improve. And we'll talk about, what can you have to do to do it successfully, and how do you make the changes necessary? Because invariably, when you debrief your trading, there will be elements that will come up, and we'll talk about how you can utilize that to, implement and improve your trading. Then, as always, on here on the Monday Market Matters sessions, that we will check on the live markets as we go towards the sort of opening of the US stock exchanges in in about the next 20-25 minutes. So for those who don't know me, my name's Paul, traded for many years. Primarily, I like to focus on FX indices and commodities for my own trading, and I tend to be for longer term trading, position trading and swing trading. I tend to be a trend trader, and then I tend to be a sort of reversal trader for very shorter term intraday trading, all of which that experience will come out during these particular sessions as we go through particular content and as we go deeper into sort of understanding and talking through the markets themselves. So, here on the ActivTrades Monday Market Matters webinar series, basically, effectively, the whole idea of it is to help traders start the week in the right frame as we prepare for the opening of the US markets. So each week, 2 o'clock London time, we'll be covering a bit on the news. Okay, what is the major news to be aware of for the week ahead? We'll do a major piece on education. Okay, just a piece on help building your trading knowledge. Okay, there's always something more we can learn. There's always something we can always improve in terms of our understanding or insight into whether it be markets, methods, money management, or managing ourselves. We'll also have a look at the ActivTrades platforms and tools that are available there for clients to utilize. And as I said, we'll finish off with a look at the live markets at the start of the US session as we go look to sort of start the trading week in the in the kind of right frame, okay, on the right foot. All of these, as I said, every week at 2 o'clock London time every Monday. We appreciate that we have a broad range of experience of people who join us for our sessions, for complete beginners to trading, to those of you who are intermediate and advanced. You are all very welcome here. There will all be something here for you to be able to take away. And we also recognise here at ActivTrades that we're talking to a truly global audience. That these are the English-speaking webinars, but we have people joining us from all over the globe. Just want to say that you are very welcome here. We hope that you're all safe and well, and that you are enjoying these rather interesting markets that we find ourselves navigating through 2022. It's great to have you all here. And if you've got thoughts or comments or questions, please, by all means, feel free to put them in the chat box, or you will see that you can email them to englishdesk@activtrades.com. Or even if there's content that you'd like to see us cover, if there's a particular trading topic that you'd like to see me cover during these series and during one of the education pieces, then please, we will gladly accept all the feedback. We want to make these sessions as helpful and as insightful for yourselves. So any feedback is always very much appreciated. So as I said, we always just have a quick look at what's the news coming up. And those of you who have joined me every week will hear me sort of say repeatedly that for new traders, I don't expect you to basically be able to sort of deconstruct the news and build a trade plan of it. But what is very important is that when that major news is coming out. Okay, that major news will come out, or invariably more times than not, will create an element of volatility, create some challenges and also opportunities with the markets. But as a new trader, it's important because you don't want to be, to sort of use the old commentary, you don't want to be stepping in front of a freight train, all right? That rarely ends well. It's the same with markets. So as I said, it's important to know when that news is coming out. You'll find that there is a very good economic calendar that you can utilize both on the ActivTrades website and others on the internet. And also, as an ActivTrades client, you'll find that every start of each week, they'll send you a little email that basically just gives you a hint of what's coming up. So, as I said, it's important to know when this information is coming out. So, this week we've started with a little bit of a risk-off mentality, but a lot of that is actually to do with the kind of the situation in China, the sort of elements of what we've seen as, increased lockdowns, but also a good deal more protests, all right? There about lockdowns and about the situation there, and all of that is kind of feeds into a little bit of a risk-off mentality in terms of traders within Western markets. We've also had, and in fact it's going on at this as we speak here, is Christine Lagarde, okay, the governor of the European Central Bank. She's scheduled to speak, and undoubtedly traders will be interested to hear what she has to say. We've also got Australian retail sales are due. As I said, we've got quite a lot coming on this week, okay. Quite a lot of it in the US, but equally also around the globe. So we've got CPI data tomorrow for Germany and Spain, GDP for Canada, and their US consumer confidence report is published. But it's actually when we get into start to Wednesday, people are going to start to take a real interest. So you've got Chinese manufacturing PMI, employment figures for Germany, all right, along with EU CPI. All right, and in particular, there's also a number of important releases from the US, and most importantly, I think about 6:30 London time, is there'll be a speech from the Fed Chair Powell, and traders going to be interested to see whether he puts the kibosh on the kind of the growing narrative that inflation is decelerating, and that means there will be fewer and less brutal, is brutal the right word, sort of interest rate rises, okay, that we might see, okay. So lots of traders will be waiting to see what he has to say about that. Then we get into the end of the week, okay, to start the new month as well, okay. So there's things like the PMIs there for Europe and US are due. There's also the US PCE numbers, but probably what also is interesting on Friday, as well as some Canadian data and Australian data, non-farm payrolls. Okay, first Friday of the month, okay, and invariably that we will see that data. And with Mr. Powell's comments on Wednesday evening, and then some of the other US data Wednesday, Thursday, and non-farm payrolls on Friday, that could have a huge impact on both the US dollar, but also US indices, and traders will be very keen to sort of be aware of that. So, part of this as Monday Market Matters is you getting ready for that week, okay? Just recognize when that data is coming out so that you're in a position, not to fall foul of it, all right? So as I said, lots of chunky data coming out this week that provides, both threat and opportunity, all right? And more of that we'll cover as we go deeper into our series here on the Monday Market Matters webinar. So, let's look more about our education, okay? And what we're interested about debriefing your trading to improve your performance. As it says there on the slide, new traders very often get caught up in the process of executing their trades, and that's not unsurprising. Okay, you're learning a new skill set, you're learning to engage with markets, and invariably, you're going to judge your success by the trades you take and how particularly successful they are. However, what I want to share with you new traders today is that the true progress that you are going to make as a trader comes from when you start to sort of keep records and journal reports, and then review your trading and use that to develop your trading performance. As it says, traders, we love to focus on the hard skills of trading, all right? Things like technology, the charts, trading systems, all right? And I run traders events, all over Europe, okay? And invariably, whenever I see traders, they want to talk about charts, trading systems, okay? They love that, the hard skills of trading. However, when we start to look to combine them with the soft skills of performance management, that is when we start to see progress as a trader. And in this session, what we're going to do, we're going to talk about debriefing your trading to improve your performance. That's why I want from you on a personal level, but also here, at ActivTrades, we want to be able to give you the tools to be able to manage yourself as a trader and deliver the best performance you possibly can. So, it's an interesting question for those of you joining us here today. Excuse me. How many of you presently keep good records and debrief your trading? All right, do you do that? And you can be honest. There's no judgment from me. Okay, these sessions are educational. They are here to help you learn to improve as a trader. So I'd be interested to know, what, if any, debriefing do you do of your trading performance presently, and how do you do it? Okay, so if you've got experience of that or thoughts or comments, please put it in the chat box. I'd be interested to see what your ideas and thoughts are. And we'll talk more about it as we go through these next few slides. So you'll find there's quite a few questions for you here today, ladies and gentlemen, is that, as traders, we all want to achieve our goals and see some success. Part of that can be how you define success. However, occasionally we have to take time to reflect upon our trading endeavors and reset our visions and our goals. And many new traders fail to see the importance of such actions. As we said on the previous slide, they just get caught up in the hard skills of executing trades. But I can assure you, from my own journey as a trader, from my own journey of working for funds with other traders, and from my own experience of coaching and mentoring hundreds and thousands of traders over the last 10 years or so, I can assure you, all right, that reflecting upon your endeavors, resetting your visions, goals, it works. Okay, it does work. So another question for you: is it possible that your trading results for that session could be determined before you even switch on your computer? What would you think about that? Do you think that's a fair question? Do you think that is an ideal question? My view would be that I believe it most definitely can be. It can be, your trading results for that session could be determined before you even switch on your computer. So it's in your best interests to make sure that you're in the best place possible before you start looking at, charts and wanting to execute those hard skills of trading. And the reason I say that is looking at where focus goes, all right, where focus goes. So, an amateur trader's focus, in terms of the 4 M's of trading: your methods, your markets, your money, and your myself. Where does the focus go? Well, what we see is that, 2/3 of that sort of focus goes on methods, all right? New traders, they always want to know, where do I buy, Paul? Where do I sell? What do I need to do? They think that's it, okay, to being a good trader. And, and I wish sometimes it was that. And then what they might do is they might have, the other 30% of their focus goes on markets, okay, trying to understand markets, trying to unravel markets. And actually, when it comes to managing money and managing myself, it's a small byproduct, okay? Lots of new traders think that it's not remotely important at all. So, those numbers might change a bit, they swing a bit differently and stuff, but generally that's, as a rule of thumb, that's where we see amateur traders' focus go. That's where we see new traders. And so then you have to think of, well, how would that change from experienced professional traders? What would those numbers be the same, or would they differ? And actually, what we find is that when it's a professional trader, okay, someone who's been trading for a good while, might be doing it full time as their main business, might be employed as a trader. What we start to see is that actually method, all right, is maybe only 5 to 10%. All right, invariably what I find is that the good traders I work with have just some very simple setups, a couple of simple setups that they are able to execute flawlessly time and time again. They'll have some interesting understanding of markets, but really they're just trying to understand, is there a risk on, is there risk off mentality, is it trending or is it consolidating? That's enough. Then we're putting more emphasis on focusing on the money management, okay, understanding risk management, understanding their money management for their individual particular trades, and also their exposure to markets. And the most important element, 2/3 and above, is about managing themselves, okay? It's about managing themselves. And the more you trade, the longer you've traded, they realize it is, it's a psychological game, and that, you're actually only in competition with yourself, really, and you're really in that competition is just about really being a better trader tomorrow than you were yesterday. And a good deal of that comes from managing myself. And very often what I find is that new traders, at first they don't realize the importance of that, but the longer they trade, the quicker they realize that it is important. That in fact, in many times and places, they are the biggest challenge to their success, regardless of what the markets are doing. Okay, very often they are the biggest challenge to their own success. And so being able to recognize and understand that, all of that can play its role in helping you improve and manage yourself as a trader, and then invariably, manage your performance. So what can we learn from all that, all right, as traders? Well, it is a case of that simply focusing on your trading method is not enough, all right? I understand for new traders that, it's a starting block and you want to understand it and you want to learn it. And traders love, they love learning about new trading methods, how other people trade. It's part of, that kind of curiosity about trading. What we have to realize is that trading is a performance activity. Okay, it's not, you don't get paid for doing a 9 to 5 Monday to Friday job in trading, all right? As trading, it's a performance activity, which means we as traders need to develop a performance mindset. to enable us to operate effectively within markets which are very uncertain. That mindset is what provides us with the resilience to be able to handle whatever happens in the market. And it's a major part of that fourth M, which is about managing myself. So, how do we do this though? It's all well and good, but actually, how do we do it? Well, one of the first things we can do is we can start by keeping great records that provide us with the data to help us improve our performance, being able to make good choices based off hard data rather than just, sort of whimsical views on the market, or falling foul to recency bias, just basically changing our trading plan based upon the outcome of the last trade. So, great quote from Dr. Alexander Elder, who wrote a great trading book, Come Into My Trading Room. Show me a trader with good records and I'll show you a good trader. And it's a very simple quote, but unbelievably important. And I could back Mr. Elder or Dr. Elder up on this, in that all of the traders I've worked with over the years, the ones who've got good records are the ones that who go on to have the best trading careers. Okay, it's just basically you can't escape that, ladies and gentlemen. So we live in a world now where technology basically allows us to keep records much better. But as a rule, okay, there are a few basic records as a trader that you should be keeping, namely your trader spreadsheet, a trade journal, and an equity curve. And as part of your trader spreadsheet journal, you'll also have a grade card. So we'll look at equity curves in the future, but I'm just going to quickly go into spreadsheets, journals, and grade cards just to help you get an insight, for those of you new, about what you can start to do to help you keep good data so you can improve your trading. So, you should have a typical trading spreadsheet, Excel. That's a very simple basics one that I've used in the past myself, but invariably, I'm sure your Excel skills are probably better than mine. And if they're not, well, you'll find that there are a wide range, of opportunities and options on the internet there that can help you with it. But the important thing is that invariably is that, you're keeping a record of the trades. Now, what you'll find is that when you check into your ActivTrades platforms, okay, you'll have MT4, MT5, and ActivTrader, okay, they will keep a record. But equally, it is your responsibility to ensure that you are keeping your data as well. These are the things that are important to you as a trader. What is also important as part of that is to have a grade card, okay? And this is what I talk to new traders about, is having as a bit of a grade card, and the idea being to track and rate the performance and the execution of all of your trades. All right, so you can see that for performance, okay, I rate my trades from 0 to 5. So 5 would be my pre-trade target was hit, and alternatively at the other end, a score of 1 as if my stop was hit. Okay, so I do that for every trade, just grade it on the performance, but more importantly, I also grade it on the execution. And I want to be scoring 5s, that I followed the trade as dictated in my trade plan. That's what I'm aiming for. I don't want to be getting 1s, scoring 1, which are just impulse trades, okay, or setup 2, which you're just entering the setup late, you're chasing the market, okay. What's more important to me is focusing on getting good execution scores. I know, as an experienced trader, that once a trade is triggered, anything can happen. It's one of my core beliefs as a trader. Anything can happen. So the performance score can change, okay? It can change because of what goes on in the market. But if I'm making sure that I'm always trying to score 5 from my execution, then I'm doing the right things as a trader, and that's what's important. And then also a trade journal, okay? I suggest you fill one in for every trade. If you are a very high frequency trader taking 10 to 20 trades a day, you're unlikely to be able to do that. But if you're taking 1 to 2 trades a day, you've got no excuse not to be able to fill one in for every trade, capture all the details of your trade, but also capture, what were your feelings on the trade as the trade was playing out? What were their feelings? Okay, what was your feedback loop? All right. And also what I do for myself is that I make myself write down what were 3 things I learned from this trade, because I find that very often if those kind of 3 themes keep sort of repeating themselves, it is giving me a very good insight into what I need to change my focus and what I need to work on going forward. So it is enormously helpful in that sense. So once we've been collecting all that data, then we want to shift on to talking about, well, okay, we've got all this data, what do we do? How do we look to debrief? What is it we're particularly looking to do? And what I suggest is that at the end of every day, debrief your trades, all right? Go through them. Do it again at the end of every week. Just set a little bit of time and just go through all your debriefs from that trading week, and also at the end of every month. You might say, well, why am I doing that, Paul? Well, what we're doing is that every time you go through that debrief, okay, those trade journal sheets, every time you are reliving that trade, and you are reliving both, the learning points, both the success points, and also both the challenging elements of it as well. And you're getting more exposure, and you're extracting the most value you can from that particular session. And there is an important. I've got photos there. There's fighter pilots there, and there's medical teams there. Okay. And there is a reason why they use debriefing, because it helps them get better. It helps them extract, excuse me, every drop of value from their trading or from their particular missions, and it helps them improve both as individuals and as a group. And that's why we're doing it as a trader. Okay, we want you to be able to improve as a trader. Remember what I said right at the start. I want you to be a better trader tomorrow than you were yesterday. That's the way we move forward. And one of the things we can do with that is collecting the data from our Excel spreadsheet to work out some KPIs, some key performance indicators, trying to understand things like our win-loss ratios, understand what is our risk to reward ratio, and then as you become deeper into it, you'll want to understand what are your expectancy. Can you generate positive expectancy, or are you on the negative expectancy? What will also develop and interest you is that you will also find out what the developing trends are for you. Remember, you're a trader. Okay, lots of traders like to trade trends, but what becomes apparent is that there are also trends within you in terms of your performance, in terms of how you operate as a trader. And being able to identify and develop them and understand them can be enormously beneficial to you as a trader, enormously helpful. Okay, and I'll touch on one of particular ones of my ones later on in this in a few slides time. So in terms of understanding, KPIs, your key performance indicators, it's important to know things like, how many trades did you place? All right, what were the number of trades? Is there an average? Okay, are there particular times and periods where you trade more often than not? What is the number and what is the percentage of your winners and your losers? You'll also want to start to understand what is the size of your average winner, what is the size of your average loser. You might also want to sort of pick up on data, things like what is your average time in your trade. So for myself, I not only will I have a physical stop loss, but on an intraday basis, I can also have a time stop loss as well. Okay, namely understanding that how trades play out for myself. It's also important to understand, well, how many numbers of long buy trades do you have versus the number of short trades. So for me, I know I have a particular bias to the short side. I like selling. Okay, I like shorting markets. Okay, I see their setups much quicker and simpler, and I really like to trade them. I'm not actually, strangely enough, I'm not necessarily much more profitable as a short trader than I'm a long trader. I just see the short setups much quicker and easier. That's just my cognitive recognition facilities. And then, as I said, as you go deeper and collect more data, you're going to want to understand what is your level of expectancy. Can you generate positive expectancy? That's the simple equation for it there. But as you develop as a trader, you'll learn and understand and work to improve that wherever you can. So one of the things I suggest, okay, when I started working for a fund was that basically, every month I had to write a report, okay, to the board of directors. And with that, I would look at some of the data. This is a little bit old, but it's like the report that I would write when I last worked for a fund. Okay, so during that quarterly period and stuff, I had a 70% win ratio, 38% of my trades were reversals, 2/3 of them were trend following. Interestingly, as I said, in personal development terms, what I worked out was that 50% of my losing trades were on Fridays. Okay. And the reason for that is that I would start trading on a Sunday night at the opening of the position session, the Pacific session. And actually, so by Friday, I was just a little bit burnt out. I was just a little bit tired, a little bit jaded and stuff. And so you make sloppy choices, okay? You don't make great trading decisions and stuff. And so I found that 50% of my losing trades came on Fridays, all right? So with that in mind, I was able to make a change to my trading plan, wasn't I? And my change to my trading plan was that I just didn't trade on Fridays. I would use Fridays to do a little bit of education work, a little bit of development work, a little bit of updating, making sure all my records were in place, but actually would just not trade on Fridays, okay, because I realized that if I started trading on Sunday evening and doing long days, Monday, Tuesday, Wednesday, Thursday, by Friday, I was just a little bit, burnt out, okay. And so that was a good decision that I could make based on the data, all right, not just on how necessarily I was feeling, but on the data which represented that. You'll also remember that we talked a little bit earlier about grade cards, okay? And what I talk about there was, remember my performance score and execution score. So, for that particular period, my performance score was 3.5 out of 5, okay? Which is, it's fine, it's a positive, quarter, etc. But what was more important to me was that my average execution score was 4.95 out of 5. It was almost, it was really getting up there. And that's what I look to focus on, okay? Because as I said, I have as a core belief that anything can happen once a trade is triggered. Anything can happen, but that doesn't stop me doing good execution in terms of plan my trade my plan, and manage my risk. Those three elements, which you'll hear me talk about again and again and again. The interesting thing is that once you do it for overall, you can actually go down and start to do it by strategy, just going through the details and the data. So here was one for that was like an intraday 1 hourly chart trading strategy called the magnet, and it basically looked to sort of scalp on an intraday basis. In that month, I was able to work out that it did 44 trades. It generated net points of 266 pips, had a 73% win ratio, and the risk to reward ratio was about 1 to 1. All right, so I normally like to have asymmetric reward to risk ratios, okay, but 1 to 1 is fine when you've got a win ratio of 73%. Okay, you have positive expectancy, so you can start to break it down, and you can start to understand not only your overall trading, but by each individual tactic that you might employ as as your overall strategies. Because no strategy works all the time, okay. There will be periods where it'll work better than others. There'll be periods where maybe it needs to be shelved for a couple of months, okay. If you have a very good trending strategy, but the market you trade is completely range bound, well, it doesn't really matter how good a trending strategy it is. If it's range bound, the market environment, well, it's unlikely to be that successful. So there might be periods where you have to recognize that you just have to you might want to bench some of your trading tactics. That happens, okay. That happens to all traders. There's ways and means to deal with that, and maybe we'll look at that in future sessions. So, Dr. Elder also has this great quote here, is that keeping good records is the single most important contribution to your success. If you maintain scrupulous records, review them and learn from them, your performance will improve. And I wholeheartedly endorse that message, okay, from my own experience, from working on trading floors with, exceptional traders, to having coached and mentored, hundreds of traders over the years, all right. All with the traders who've done well have always been the ones that kept good records, okay, and they would review them and learn from them, and generally work at just improving their performance, bit by bit, okay. As I said, trying to be a better trader tomorrow than you were yesterday. And that's the way we progress as a trader. So, a few final points about managing performance and debriefing trading is that there's always that very oft quoted commentary about how it takes 10,000 hours or 7 years to become an expert in any field. And some people will live by that. Some people would, debunk that. As a general rule of thumb, it is going to take time. All right, it's going to take time and practice to become an expert in anything. But what you can do is you can speed up that process using constant debriefing. All right, debriefing every trade at the end of the day, at the end of the week, at the end of the month, right? Just basically every time you relive a trade, you are cementing the learning, okay? You're starting to turn rules into habits. What I find is that losers see record keeping as a waste of time, okay? They think it's boring, all right, okay? But professionals, the ones who go on to have careers as traders, they see it as an investment that develops and improves their performance, and therefore their P&L. Maybe not straight away overnight, but over years. That's what helps. So keeping good records and reviewing that, okay, not honestly reviewing, is that it tells you how you are actually doing, which can be different from how you think you are doing, okay? The data doesn't lie, all right, ladies and gentlemen. And I will say it, sometimes the data can be challenging. Sometimes the data can be, it can be challenging because maybe you've had a bit of a challenging time as a trader. Everybody does, okay? Everybody does. Nobody escapes that. Nobody escapes that. It's just part of the learning curve, it's part of your experience as a trader. But if you're keeping good data, well, then it just sort of takes the emotional sting out of it, because you'll realize that it is part of what you're actually always doing. It's part of what, life is like as a trader. And and that's what we're just trying to sort of learn from and work with and develop, okay, our understanding of not only markets and methods, but also how we trade, all right, as individuals. So in conclusion, ladies and gentlemen, before we switch to the markets, okay, it is important to focus on the soft skills of trading as well as the hard ones. Keeping records is the first part, because good data is key. Good records, they're a sign of self-awareness, and they are a sign of discipline. And it is a little hint to yourself when if you've been trading, especially if you're an intensive intraday trader, and you're finding yourself, just ignoring keeping your records, or just finding it too much work. That in itself is a sign that your discipline is waning, which can be a sign that you're burning out as a trader. Okay, and intraday traders, they will burn out. Okay, they do. Everybody does. Okay, everybody does, and it's probably a hint that it's probably time for you to take a little bit of a break. And most of you will know by now that discipline is one of the keys to trading success, and debriefing is key to improvements in performance. All right, things like fast jet pilots, okay, Formula One teams, medical surgical teams, okay. All of these, high performance teams, they do it. Sports teams, okay, they do it, all right, because that debrief is key to improving their performance. And as a trader, why wouldn't you want to improve your performance? Why wouldn't you want to be a better trader, okay, every day? All right, so these high performance teams, they do it because it works, right? Because it works, because it helps. Because what we learn is that making mistakes is fine. You're human beings, you are going to make mistakes. But if you keep repeating those mistakes, well, at some point you are choosing that, okay? At some level, you are choosing that, okay? But if you find doing your best to cut out, repeatable mistakes, cheap, simple, sloppy mistakes, all of these things help go towards contributing towards your P&L, and that's what we're looking at. So recording and debriefing, they speed up your progress towards trading success, which is what I want for you. And they allow us to adjust our trade plans on the back of hard data, not simple gut feeling. Now, believe me, as you develop as a trader, that sort of intuitive gut feeling can be enormously helpful to a trader. But the truth of the matter is, it takes years to develop that, all right? It's not a case of taking 2 or 3 trades and then trusting your gut, okay? It's basically, it's almost like a learned skill in itself, and that comes from doing all the good stuff. And the good stuff is basically planning your trade, trading your plan, managing your risk, keeping good records, debriefing your trades, or amending your trade plan based on the data to be the best trader you possibly can be. That is what basically helps develop that kind of intuitive gut feeling. It takes years to develop. And as Dr. Elder says, show me good records and I'll show you a good trader. And he's absolutely spot on, right? Okay. I said, I have never worked with any sustainably successful trader who has not kept good records about their trading. So John says, I personally take very few trades each month. Do you believe it's beneficial to be in the market more consistently, perhaps just with a small size, simply to learn more about yourself and your style? And that's a great question, John. All right, thank you for that. There's kind of the 2 sides to that. If you have found a particular style that works for you, that that you're enjoying, that allows you to trade effectively and consistently and with discipline, around your other existing commitments, well, then invariably you'd always want to keep that running and work that well. Nevertheless, there is always an opportunity to learn more about yourself and about trading. And so what you will often find is that, traders might have an educational account. So this might be a second or third or fourth trading account, which allows them to trade live, but trading at the smallest position size, like maybe 1 micro lot, okay, so that they can take trades, they can have exposure to markets, but they can learn more about that from themselves and about their particular style, because of invariably their frequency of trading improves, and they have to just recognize that it is that they are trading to learn rather than trading to earn, okay, and that's why it's better to do it on almost like a separate account, okay. They're completely different, so that it's almost like you have Trader John, and then you have sort of student, John, all right, and that you know how and when you're operating correctly. So in terms of being able to sort of trade the way you want to, but then also recognize that you might want to just pick up particular skill sets or educate yourself, all right, in terms of learning new skill sets and learning more about yourself and ensuring that that you're turning rules into habits. So good question, that, John. I hope that helps you. So taking time to record and debrief your trading will help you improve your trading performance. Okay, I guarantee that, ladies and gentlemen. There's not many guarantees in trading, but recording your trades and debriefing your trading will help you improve your trading performance. Even if it just means that you stop if you just cut out sloppy trades, okay, sloppy trades, that in itself will all have a help in terms of nudging the needle more in your direction. That's what we're looking at. That's what we're looking for. Okay. John says usual debrief is throwing the laptop out the window. Well, I can understand that there can be an enormous amount of frustration, John, but I'm sure you've already learned that is really a constructive way to help improve your trading. Okay, so that in itself is feedback. All right, that's in itself is feedback and it's telling you great stuff. So as I said, keeping good records, taking that away, going through those trades, just taking screenshots of your trades before and after, just basically utilizing as much as you possibly can. Take as much data, as much value out of that trade so that you can just, as I said, we just want you to be a better trader tomorrow than you were yesterday. And and I appreciate that might not sound terribly exciting or sexy, but that's the truth of trading. Okay, it's just about constantly trying to work at being the best trader you can be on a day by day basis, right? And then until those rules become your trading habits. And some people pick that up very quickly, others not so much. But it's about best practice, about doing the right things. So let's why don't we take a look at the charts? Just American markets are opening up and stuff. Let's have a little look and see what's going on. But before that, just remember a little reminder that the next Monday Market What Matters webinar will be next Monday, 5th of December, 2 p.m. London time. And next week we're going to talk about trading rejection candles. So what I'm trying to do during these Monday Market Matters webinars in terms of the education is that we'll have 1 week it'll be hard skills like trading rejection candles. Next, the other week it'll be soft skills about things like debriefing your trading, okay, building routines, etc. So that together you're getting a good education that will help you do the right things, okay, going forward as a trader. So 5th of December, Monday Market Matters, 2 p.m. London time. It's going to be about trading rejection candles. Be sure to sort of register and join us there. Okay, spread the word. Okay, lots of great stuff here, and you'll also find that the previous sessions, which should also be on the ActivTrades webinar archive, so they'll be there for you to work with. So if you've got any questions, or particular, you're watching this later on the webinar archive, okay, and you're wanting to sort of make comments or feedback, well then you can get in touch with ActivTrades. There you've got the English desk number there, which is 0207 6500 567, or you can email them at englishdesk@activtrades.com. okay, and be sure, as I said, if you've got any feedbacks or thoughts, or if there's even topics you'd like to see us cover in future, by all means put them there and we'll be very happy to take that on board. So if you'll just bear with me a moment, what we'll do is we'll switch across to the ActivTrades platforms and have a little look at how the markets are setting up for this particular week. So just bear with us one moment and we'll switch across. Splendid. So I'm hoping that you can all hear me. Okay, I'm hoping that you can see the charts here. Okay, ActivTrades platform charts. And it's a case of, they can see it, and here I am. What we've got up here first, you can probably see maybe at the bottom there, this is my US dollar profile, all right? So, as I said, I particularly like to trade FX indices and commodities, and we'll have a little look at that there. So, within the FX world, I always want to have a little look at what's the dollar doing, okay? And I can do that through the dollar index. You'll find that as an instrument. Here we go. I'm just going to bring this up here. Bosh, see that here. You'll see it USD IND. And then I have it as a futures contract there. Okay, so this one's for December 22, so that'll change in a couple of weeks' time to the March contract. But what I'm always looking to do is just to understand what is the US dollar doing. And this is a personal thing. I personally don't trade the dollar index. It's very, very rare that I would trade the dollar index because it's it's effectively like a synthetic product. It's to give us an indication. It's a basket of other currencies against the US dollar, but what it does do is it gives me great insight into what the dollar's doing. Okay, in the FX market, the dollar US dollar is king. All right, regardless of commentary about it being replaced, the reality is that I don't think it's likely to happen anytime very soon. Okay, so understanding what the dollar's doing, especially in a year like this year where it's been enormously strong, is a key starting point for me in terms of my own analysis. And so if I look at that here on the weekly chart, sorry, my apologies, on the monthly chart, we have, here we are, the 28th of November. We've only got 2 more trading days of the year to go. Well, you can see that has been a very bearish month for the US dollar, hasn't it? It's back down to these kind of levels here. That's telling me that, if I go down to the weekly, well, we can see, I think we talked about this a couple of weeks ago, price had come off its highs. It effectively tried to push higher again, and then we had a real rejection candle, which is what we're going to talk about next week, and price has just collapsed now, and it's sitting on that kind of like 106 handle at the moment. I would suggest that's where we're looking at. And so there's still been an element of bearishness. We're going to the daily. Well, actually today price has bounced off the daily 200. Let me just pull this in so you can see. I have on my charts, I have a green 200 period moving average, a blue 20, and a red 50, just simple moving averages. And we can see this morning it's come down, it's bounced off there, and it's holding up towards that kind of 105.70 to 106 handle there, right? So my view is that we'll probably have a quiet couple of days until the news really starts kicking in Wednesday, Thursday, Friday. Okay, that's my view, unless something happens that changes it, but that's what I suspect we'll see. And so if I go into the 4-hour chart here on having sold off last week, I think perhaps maybe we just go a little bit sideways, pivot, just under 106 and stuff to do that. And what that's telling me is that, as I said, is that there's been real dollar weakness. I don't necessarily think the dollar trend for the year is over. I think we might get a little bit of I think we might get, if I go back up to the daily chart here, it wouldn't surprise me if price rallied its way up back up to that kind of 109, 108 area. Okay. In towards the end of the year, before it makes a decision whether it wants to basically carry on or roll over and forth. But we shall see. A lot of that will depend upon what Mr. Powell says this week, and I think that will have a huge impact. So, the dollar has been weak during November. So if we look at the flip side of that, which is the euro against the US dollar, so the euro makes up about 57%. 2/3 of the dollar index. All right, so whenever there's a inverse correlation there between the dollar index and the euro, and as I said, we can utilize that for our own trading choices. So we looked at the monthly chart of the dollar index, and it was effectively it was collapsing. We can see here this month has been a very strong bullish month for the euro against the US dollar, not surprisingly because there's an inverse correlation. If I go down to the weekly chart, and now what I'm interested in is you've got there up to around about the kind of 105 to 105.50 area. Price is getting up to the weekly 50 period moving average, which is the red. We've also got a sort of kind of level of, well, what will be resistance, and so I'll be interested to see price getting dragged up there and hanging around. And I think that's what I'll be looking for. Okay, just to see can it actually get up there and stuff. The daily chart, it did have a bit of a push up there. That's probably coming off. That's because of Lagarde's comments, okay, and also entering into the US market there itself. But there has been dollar weakness, and which means we're getting strength elsewhere. We've seen the Kiwi dollar has been much stronger. If we see this is the weekly chart. And what we're looking at is, having made this low here, well, basically, we've effectively, the last 2 months, we've had basically dollar weakness and Kiwi dollar strength. Okay, and that's what we've seen. If I look at the daily chart, it has given me reversal signals there, and you can see, having pushed up to the 200 period moving average, it's now above it. Wouldn't surprise me if it comes back down and retests it. That's what I'll be looking at, see if price comes back into this zone around about 61.50. And see, does it retest before it makes another leg up? And a lot of this will be decided, I think, over the next week or so in terms of Powell's comments, NFP, and then we get into some of the other big US data, and that will give us an indication about US markets, okay, in terms of US indices, but also the US dollar, and that then has a huge impact across all of these, the majors as we would call them. All right, okay, these are kind of major FX pairs against the sort of the US dollar. If we look at Japanese dollar against Japanese yen, you can see that, okay? There's the monthly chart. You can see for this month, all right, that has been a very, very strong, bearish candle, hasn't it? So go down to the weekly. Once we had the kind of Japanese Bank of Japan intervention around 150, okay? We can see that it has come off there, considering now it's, it's pivoting around 140. It's sat underneath 140. That is of interest if we go down to the daily. It's the price action isn't necessarily pretty, but I'd be saying you're looking at 140. Is that now going to act as a particular level of resistance? If I go down even more, just looking at, I think we're in a bit of a zone there, and I think we're just waiting to see what comes out of the particular comments and stuff as we go into it. So we can see US dollar has been weak, okay, but it'll probably pivot a little bit this week until we get some clarity in terms of where it wants to go. All right, in terms of the US dollar, okay, once we've got that kind of data out, it's having made big moves a couple of weeks ago, we're now sort of just pivoting. We're just going sideways a bit as the market decides where it wants to go. So with that in mind, why don't we have a little look at the US indices? Okay, so what I'm going to do is I'm going to put it actually up on this one because we've got plenty of charts here we can look at. We can look at some of the indices and commodities. I know that's, as I said, that's what I particularly like to focus on, FX indices and commodities, and to bring that up, and we'll have a little look at these kind of US indices along with the some of the European indices and get an idea of what's been going on. So just bear with me. Let's just put these on to the charts. I was talking about this a little bit earlier today to some of my own clients and stuff about how what I've got here. Let's just put this all on weekly so we can quickly move between them. Is that Bosch? Okay, so what I've got here across this top tray is this is the Dow weekly. This is the Nasdaq weekly. This is the S&P 500 weekly, and this is the Russell 2000 weekly. So the four major US indices. And what I see is that on the weekly chart, here we go, let me just zoom into, this is the Dow. The Dow has been leading the pack, and I think that's a bigger picture, and I'm sure fundamental analysts would be able to give you far better insight than me. I'm a trader, simple trader, using technicals. Is that we've seen is that kind of a shift out of the tech companies and in towards the bricks and mortar companies, and that's what's we're seeing the Dow rally up strongly. And last week we closed just by a sliver above this recent high. Okay, this high which we had seen during the year, every time we pulled up, we fell away, pulled up, fall away, pull up, fall away, pull up, fall away. Okay, this time we've come back and we are every time it's been basically lower highs, we've actually closed up above there and stuff, and we're at that level. And if I go down to the daily chart, this is a place where the market is going to have to make a decision, and that's what we're going to be waiting to see. Okay, if Powell agrees with the deceleration in inflation, well, I suspect we see markets rally higher. If it doesn't, okay, and he reprimands traders, then I think we start to see price dropping lower and stuff, and that's what we're going to be waiting to see. So the interesting thing for me is, as I said, the Dow has rallied up, but if I look at like the Nasdaq hasn't, has it? The Nasdaq is just kind of going sideways, and maybe at the range, high that range, but the price action over the last couple of months has not been terribly pretty or terribly inspiring. And in fact, at the moment, it is still from that high from last year's Thanksgiving. The fractal highs are much lower. All right, each one is lower, and it might be said, we'll see how this one creates and stuff, and and that's an indication, as I said, of that kind of difference between the tech firms and the bricks and mortar firms. There's been a big difference there, and that's that's what we see there on that Nasdaq. The daily chart is just pivoting around this kind of area here. Okay, I'm not terribly excited by that. Nothing for me to get interested in. Start to go to the S&P 500. Well, on the weekly chart, what I see is we're pivoting around the big round number of 4,000. And on the weekly chart, I see as, you've got the 50 period moving average acting as resistance and the 20 period moving acting as support. And it's just confirming that we're pivoting around there. If we go down to the daily chart, the daily 200 period moving average is acting as resistance. The price is just it's holding above 4,000. But we'll have to wait and see about that. Okay, I think we just pivot around this for the next couple of days until we get some clarity from Powell and the data. That would be my particular view on that. Okay, 4-hour chart sitting above 4,000, sitting above the 50 period moving average, which has acted as good support there. Okay, just look at that, good support. So as I said, I think we just continue to do that. And the Russell is the same. The Russell is the same on the weekly chart. We are just pivoting there, okay? See how we're just in between, okay? The 20 is pointing up, the 50 is coming down, and price is actually just getting caught up in there. That's just price is getting squeezed. That's the daily chart. It's on the 200. Price is just getting squeezed before it gets ready to make a decision of what it wants to do. So, you know, lots of other traders will be putting positions on now. Personally, my style, rightly or wrongly, is, you know, I like to let the market play its hand, and then I sort of look to run with it, the hares and the hounds after that. Okay, a lot of people would like to get in early because they want to improve their risk to reward, and that's absolutely fine, and that's what makes a market. But personally, I prefer to sort of let the market play its hand and then look to sort of join that new trend that comes out of that. That's what sort of suits my particular style of trading. So, you know, that's the American indices. You know, part of that is also linked to what we see. This is West Texas, this is oil, this is the weekly chart. Let's just put on the monthly. You know, if I go into the monthly chart, we can see that that is, you know, it's a very bearish candle there, okay? There's a very, you know, it's engulfed the previous candle. It's gonna, you know, unless there's a major turn, it's gonna close lower than the previous candle. You know, there's a, you know, that's you know, it's not very bullish, you know, movement. If we look at the weekly chart, okay, we can see that, you know, it's pushing down to new lows today even. All right, that's only the day one. Okay, so we don't get too excited, but yeah, we can see that, you know, today's daily chart has pushed down, okay, 75. All right, and you know, and that's just an indication of that kind of downtrend that we've seen in that, you know, and that's, you know, that's people getting worried about, you know, demand. Is demand going to fall? If there's demands fall, well, then invariably there's, you know, there's less requirement for oil, isn't there? Okay, and then, you know, we see, you know, people, traders selling that rather than sticking with it. You know, then we switch across to the sort of the European charts here. Okay, you know, looking at the DAX. DAX has had quite some run. This is a weekly chart. It's had quite some run the last 2 months. All right, but, you know, if I'm honest, I would be very difficult to find why that would be. All right, because you know, they're still dealing with lots of issues in European stock markets. Again, it's dealing with lots of issues with the European economy, especially with Germany. So you know, so closely tied to the use of Russian energy. You know, that has had an impact. And we've also got some information coming out later this week, which is about the European Commission's views on Hungary, okay, in terms of funding and what have you. There's been challenges and issues going on there. So there's been lots of things there, you know, that you would think would weigh on the share price or the, you know, prices of the equity indices, but you can see for yourself, price is price, isn't it? The price is just, the DAX has just rallied away strongly there, and it continues to. You might say that it's starting to run out of a little bit of steam, and today we've had a bit of a down day, but you know, we shall wait and see. We'll wait and see on that. That's reflected a little bit on the FTSE as well. FTSE, you know, this is what I look at. You know, here, you know, this is the weekly chart, and you know, you've heard me say before, you've had 7,000 here, okay, for the last 18 months, acting as, you know, support and various levels of strength, but then also the highs there between about 7,500 to 76. You know, you've had, there has always been sort of kind of resistance, and you know, you have to see, could it get back up there again? Could, you know, could the fact of the Hunt, you know, autumn statement, is that going to help, you know, sort of, you know, give a little bit of confidence back into sterling and into thing? Maybe. It depends on how you look at it. But, you know, personally, I think it needs to sort of, you know, to give it any kind of indication of real strength, it has to get back up to those highs, and ideally even has to get up and close above them. You know, is that likely to happen in the present? Well, it's hard to say. But then when you look at the daily chart, having really sold off strongly after this kind of bearish engulfing candle, we put in a false breakout there, okay, with a rejection candle, which is what we're going to talk about on Monday. And then you can see it's been a very kind of clear trend there, hasn't it? If I go down to the 4-hour chart, you know, it has been a very nice 4-hour chart with bounces coming back every time, coming back towards that kind of 50 period moving average, bouncing off it, just giving you an indication of, you know, that trend is in place there, isn't it? That trend has been moving there, okay, regardless of, you know, what you think about it. You know, we're into it, and supply and demand traders would now be looking and saying, well, actually, you know, is the, you know, are we going to have a kind of an issue here? If I just basically from supply and demand traders, not unsurprisingly, the first time it's come up there, it's had a little bit of you know, a little bit of a reaction. I normally sort of, if it's a bearish one, I'll normally put it in there, so just to remind me that, but you can see for yourself that actually, having had a great run, we're up at that kind of level, and so far All right, so far that has acted as resistance there at 7,500 area there. Okay, has acted as some strong resistance, and we'll see, you know, how does it play out. That, as I said, a lot of that will come down to the American data, because invariably that will have an impact all over on the it'll have an impact all over on basically all indices and all currencies. Let's finish off and look at some commodities, because I know we've got quite a few gold traders here. If you look at the monthly chart, you know, having the monthly chart having topped out here over the last couple of years at 2,000, but you know, you can see this year it's just been a long sell-off of gold, isn't it? What's that? 1, 2, 3, 4, 5, 6, 7 months, all right, of lower closes on the on gold. And then last month, or this month, Bosch, we've had, you know, effectively a real turnaround there. I mean, you can see that, and it looks like it might even close above the highs of the previous last 2 months. If we go into the weekly chart, those who have joined before, I was talking about how we had a triple bottom here, triple bottom that also had lots of rejection candles, okay? And we're talking about that next Monday, so be sure to come along. And now we've broken it, and now I'm interested to see how this is going to play out here. Could this be a very bullish, just a little pullback here? This is the daily chart. It's pulled back here, okay? You know, rallied up, inside bar, okay, falls away, puts in a bullish engulfing rejection candle. You know, really we want to see this pushing to a new high, but so far doesn't seem to do it. And I think a lot of that will have something to do with what the dollar does this week, okay? So just be keeping an eye on that, all right? And silver's been pretty much the same, okay? Silver's been pretty much the same, you know, in terms of, I'll just pull that out. Weekly chart, you know, we had all of this support around $18 here. We're bumped up there, and now we're kind of stuck here. The price is beneath the $22, but it is just going through the 50 and the 200 period there, okay? And you know, we'll just wait for that. I think, you know, price is squeezing, price is just tightening up, a bit like a lot of the other instruments we've looked at in this session. It's tightening up, getting ready to explode out a bit based upon what we see come out of the US data. And so that's kind of my final point, is that, you know, it's going to be an interesting week. There's going to be a lot of data coming out, okay? So you can see there, hopefully, that, you know, where prices are starting to squeeze up, they're starting to get a little bit tighter. And what we're looking to do is just to be ready to sort of trade wherever the price breaks out from that. That is where we look to complete. So there you go, ladies and gentlemen. We'll draw it to a close there. Okay, time flies when you're having fun and all that. I hope you found that useful. I hope the education piece has, you know, given you something to take away in terms of keeping records and debriefing your own trading, and then just having a little look at the markets. Okay, so as the start of the week occurs, gives you a bit of insight. You know, as I said, there's lots of news coming out as the week goes on. I think we're going to see prices just pivoting and just squeezing before some sort of data and news will make it pop out there and move and stuff. So there will be opportunity there this week. You know, if you are in the right space, okay, and rightly analyze markets and ready to make a move. So until next week, okay, I wish you the very best of success in your own trading, ladies and gentlemen. I hope you have a fabulous trading week, and be sure to register and sign up for next week's Monday Market Matters, where we will talk about trading rejection candles. Have a great trading week, and I'll speak to you soon, everybody. Thanks very much.